Mid-cap stage a bounce, turning the market breadth positive for the session. Industrials and power are the big gainers, while FMCG, pharma and IT are the big drags.
Bajaj Auto's ED Rakesh Sharma says weak market sentiment may have hit sales in February, even as the year should end with an expected 6 to 8% growth. He expects strong sales in the upcoming wedding season starting end March.
Experts warn of risks to inflation and growth from the imposition of tariffs by the US, even as it is unclear as to how long the tariffs on Canada and Mexico, along with China, will remain in place and what retaliatory actions could follow. Likely reciprocal tariffs from the 2nd of April is another big imponderable.
Bitcoin and other cryptos tank over fears on the economic impact of US tariffs, offsetting the positive sentiment infused by creation of a US strategic crypto reserve. You're watching us here on Halftime Report. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Hormas Fatakia. For the markets, we're in a process. We're in a process of bottom formation. Yes, the Nifty is off the lows, it's off the highs as well, sitting with a cut of 60 odd points. There is a tug of war at the mid-cap end of things as well. The index was doing a lot better, some moments ago. Right now, seeing some bit of profit taking from the highs of that day. That index just below the flat line. The Nifty bank is holding up in the green, though that one too is off the high. So the sum and substance of the last two trading sessions for our markets have been that we're in a bit of a tug of war position. It's no slam dunk decline that we had seen earlier in the previous few weeks. But at lower levels, there is some purchase that we're seeing in a lot of stocks, and that's what the advanced decline charts tell you. You have nearly two stocks advancing for every one stock which is declining. So even as the frontline indices are subdued, your portfolios might be feeling a little better than what they were all of last week. Hi, Hormas.
Hi, Mangalam. Resilience is the word of the day, if you can call it that, considering the sell-off that you saw on Wall Street overnight. The GIFT Nifty also suggesting a 170-point gap down. We did open with a gap, but that gap has been bought into, at least for now. We're still holding above that mark of 22,000. Made a new intraday low today, below the mark of 22,000, but we are holding above that as of now. So it'll be interesting to see whether that sustains as we go into for the trading session and for the rest of the week as well. There are plenty of positives in the broader markets. As you saw, the advanced decline as of now, fairly in favor of the advances, and stocks like Jyoti CNC, Vijaya Diagnostics, India Cements trading with gains of 10 to 12% in today's session. Usually it was on the opposite side of things, but today most of these stocks are trading fairly in the green. Vijaya Diagnostics at the highest point of the day, as is Jyoti CNC and India Cements too, trading with healthy gains. But what started off this slight bit of recovery though was a brokerage note that came in on India's largest lender, that is State Bank of India, and that is also doing well for itself, and that is on the back of a note from Citi. Abhishek is joining in with more details on that. Abhishek.
Well, Omas, Citi has double upgraded SBI to buy from sell. They have increased the target price by more than 15% to 830 per share from 720 that they had earlier. Three key points: a sharper net interest margin focus from the lender, sustained growth, asset quality outlook that they see, as well as valuation being inexpensive is the key highlight in their report. So the key takeaways from the management meet was that management outlined multiple liability cost, optimization initiatives, as well as yield levers that they have. So with respect to a relatively lower EBLR, that is external benchmark linked rate book, or at just 28%, and the MCLR hike repricing should actually protect their net interest margin downside. So management has guided for a net interest margin of more than 3% in the coming fiscals. However, Citi believes that the net interest margin could remain between 2.9 to 3%. Growth visibility is backed by express credit, robust corporate pipeline, as well as accelerated housing loans that they are rolling out. So unsecured retail slippages are being curtailed at 0.5%. SMA2 pool, which is dues between 60 days to 90 days, that is also being reined in. Credit cost is expected to remain around 0.5% or less. So the restoration of risk weight asset on NBFC loans should actually boost the CET1 ratio between 25 25 to 30 basis points as per Citi estimates, and weak market sentiments ally near-term equity raise overhang that they have. So they are factoring in a 13 to 14% growth and curtail credit costs, which makes them revise their earnings outlook over the next few fiscals by 1% to 2%. So stock has corrected by 18%, 16% and 10% in last 3 months, 6 months and 12 months respectively, and has underperformed Bank Nifty by 10 to 12%. So valuations are inexpensive, 0.85x with respect to price to book value, given 1% ROA and 15% ROE. Back to you.
All right, we take that point, Abhishek. Thank you so much for that. So that's about SBI, up around 2.6%. The EMS companies, they're in focus on the back of an Investec note that has come in as well. So just pull up some of these manufacturing names. We have Dixon, Amber, all of them up and about in today's trading session, though Keynes Tech is mildly off the highs. What is that report saying? Upasna joins in with that. Upasna.
Well, Investec has written a positive note on EMS companies. It has upgraded the ratings of Keynes Tech and Syrma SGS to hold from a sell rating following the sharp correction, with valuations now looking reasonable. Now, the brokerage says that the growth opportunity in EMS space looks good, but has highlighted few concerns such as high barrier to entry, high working capital intensity and weak cash flow generation for these PCBA companies. Now, it has said that it likes Dixon and Amber Enterprises. When it comes to Dixon, the company's capital efficiency, cost competitiveness and opportunistic approach followed by the management is what stands out as compared to the other peers. When it comes to Amber Enterprises, it says that the consumer durable business of the company is facing competitive pressures, but electronic and railway business yields impressive ROIC, leading to a compelling growth driver going forward. Hence, all these companies remain in focus today, and we can clearly see Dixon and Amber surging in trade today on the back of this.
There was a time when there was no stopping these companies making new highs every single day. Upasna, thanks a lot for that. But if there was a law of gravity, it has applied to these companies for sure, down anywhere between 35 to 40% from their peaks. We're moving on then from breaking barriers to rewriting the rules. Our exclusive Future Female Forward Mega Summit brings together the voices that matter. Now don't miss this power-packed conversation on enabling success, driving parity and shaping a more inclusive future. Tune in live to CNBC TV18 on the 10th of March starting 5:30 p.m. Take a short break, back on the other side. Welcome back, and we are speaking about a lot of these railway stocks having corrected significantly from their highs in yesterday's trading session. They too are seeing a bit of a rebound today. IRFC is up almost 2.5%. That is now down 50% from its peak of around 229. RVNL too seeing some bit of gains in today's trading session. But speaking of railway and railway linked names, in our special segment Insight Edge, we put the spotlight on Jupiter Wagons, which is doing well in today's trading session. Vinny joins in with more details on that. Vinny, tell us more.
Absolutely. So, even Jupiter Wagons, when you look at it, in the last 6 months itself, it's fallen almost 45 to 50% in trade. And today we're seeing a bit of a run-up coming in for the stock. Why? One, the company's mobility arm had launched its new factory for LCVs. So the electric LCVs is what they're focusing on. And we spoke to the management today, and they spoke about how they are focusing on this segment as well. Currently, their capacity for this is around 8,000 per annum in terms of vehicles that they can make. They spoke about the wheel set business, which is the key focus area for the company, and they will be focusing on this. They're talking about making investments of around 2,500 crores on this specific side of the business and segment of the business. And they are also obviously opening up the plant in Odisha that will open up in FY26 will be the axles business which will open up, and other than that we'll have the whole plant which will operationalize by in FY27. So in terms of revenue potential from this business is also quite high, because from this business itself they're expecting expecting around 2,500 to 3,000 crores revenue coming in for this business. You know, FY27, once the whole plant is operationalized, we could see this revenues coming in. And do not forget, in terms of valuation also, you know, it's quite significantly below its peak valuation of 55 times. Current PE is at around 23.6 times. So it'll be interesting to see where Jupiter Wagons moves from here on. Let's also listen into what more the management had to say in terms of their wheel set business.
Key focus for us is our wheel business, where we are undergoing a massive capacity expansion. We'll be investing close to about 2,500 crores in the next 2 years. This year, we are going to grow by close to, in FY24, we did a number of about 100 crores in this business, which in this year, we will take it up to 300 crores. Right now, the only limitation for us is the capacity. So in Aurangabad, from now 13,000 wheel sets, we are ramping it up to about 20,000 wheel sets. In the next 4 to 5 months, that capacity will be online. So that will, the 600 crore revenue target, basically, that will help catapult us to that target. Once the Odisha capacity comes in, you're looking at numbers of close to anything between 2,500 crores to 3,000 crores of revenue just from the wheel business itself. It'll 26 end is when the axle line is going to start, and 27 is when it'll be completely commercialized.
Right, that was our Insight Edge segment where we spoke about Jupiter Wagons on account of them having launched their first commercial electric vehicles. But quick commerce companies, they are on our radar right now, Swiggy and Zomato. Why is that? Because one, they've already seen a big decline from the top. And this morning we had a note that came in from ICICI Securities as well. What does that note say? 3 things. Most importantly, they believe that as per their channel checks, discounting has been past the peak levels that they saw in November 24 to Jan 25 itself. And this is product level discounting that they're talking about. So what's the second thing? That there are discounts, but they are at a cart level and not product level. So what it means is that if you go onto any of your quick commerce apps, you want to buy a soap, you won't get a 40-50% discount on that soap itself. But if your overall cart value is about 100 rupees, the app will prod you into saying that if you buy 49 rupees worth more, then maybe you get a 20-30 rupee off. What this does is this incentivizes higher order values, which basically is contribution margin positive for all these companies. The third thing that they're talking about is that, there has been a noticeable pullback in performance marketing spends as well. What all of this does is while it increases user activation, user engagement, it does it in a more rational manner, which is not as, denting on the contribution margins as the previous product level discounts are itself. Remember, these stocks have already seen a big correction. At the same time, we've, seen valuation, which as per ICICI is compelling for investors with an horizon of more than 1 year. And that explains why these stocks are buzzing around. They reiterate their buy calls on both Swiggy as well as Zomato. A higher upside seen on Swiggy as against Zomato. Target price that they have on Zomato is 310 rupees. That for Swiggy is over 740 rupees, which is much above everyone else on the street itself. So we'll keep an eye out on that. In fact, on that note itself, we spoke with Ramdev Agarwal of Motilal Oswal Financial Services yesterday about his views on the quick commerce industry. And he was fairly insightful on, saying that these companies have begun to make a bit of a bottom and they will only add value going forward.
That is one sector which is holding out very well. If you see, because see, what is happening is, while price is where it is, I mean, it might have fallen 20-30% from the top, they are increasing value at very rapid pace. Price is here, okay, it has come down from here, but value is increasing very rapidly. So it is quite possible if it stays here for 3-4 months. See, if you are talking about investing, it's not about picking the absolute bottom prices. It's about buying at fair prices. Okay, are you buying a company which is growing at 50-60% at a fair valuation? My sense is that is one sector where there is a momentum, and momentum will pick up further, and it will become very interesting. There are not some 10-20 players. There are only 2-3 players, and others will find it difficult to enter. Of course, others will try as the pie becomes big. I think it's fair value. It is stabilized in the sense that, see, nobody can say that 5% can move down from here. It can, but we are closer to the bottom, I'm saying.
Closer to the bottom, the words from Ramdev Agrawal and the quick commerce space as well. And one of the highest price targets for Swiggy on the street. In fact, the stock is still trading below its IPO price of 390 rupees. Moving on then, Prime Minister Narendra Modi inaugurated and visited the Wildlife Rescue, Rehabilitation and Conservation Centre Vantara in Gujarat. Vantara is home to more than 2,000 species and over 1.5 lakh rescued, endangered and threatened animals. The Prime Minister explored various facilities at the centre and also closely interacted with various species of animals which have been rehabilitated there. The Prime Minister visited the Wildlife Hospital at Vantara and saw veterinary facilities which are equipped with MRI, CT scans, ICUs, among others. The Prime Minister also interacted with doctors, supporting staff and workers who are managing various facilities at the centre.
Welcome back. There is recovery from the lows. That's what we're seeing in the markets, but a good time to get you the setup in the FNO as far as things are concerned right now. We're seeing some traction in a lot of these mid caps. If you look at the frontline indices, there has been recovery from the lows. The Nifty Bank is the one which is outperforming today. We have a couple of stocks which are doing a lot better as well. The broader markets is where we are seeing better recovery, even as the mid cap index at an index level is slightly subdued. The advanced decline chart tells you that we have 1,600 stocks advancing for just about 1,000 stocks which are declining. The key outperforming indices today are the ones that suggest that there is risk on in the market. What are those outperforming indices? You have, the PSU Bank Index, the PSE or the Public Sector Enterprises, and you have the Metals Index. The ones which are underperforming, again, are the ones which are looked at typically as defensive. So you have the IT stocks, the pharma stocks, the FMCG stocks. So are we trying to look at, the markets moving more in a risk-on mode or not, is the question that we'll get an answer to. Over the last couple of trading sessions, we've recovered from lows. Today's low on the Nifty is 21,965. Yesterday's low on the Nifty is 22,005 itself. So those are a couple of levels that we'll keep an eye out on. And because we bounced back from these levels, put writers at 22,000 have been fairly active. 1.3 crore shares in open interest out there, premium of 63 rupees, telling you there would be some support around 21,950 thereabouts. In fact, closer to 22,000 itself, because the 22,100 put writers are fairly active as well. And remember, these are puts which are currently in the money. On the way up, however, there is some sort of congestion that is expected around 22,350 to 22,400. Were we to cross that mark, then maybe there could be a case for short covering. But until that happens, 22,000 at the lower level to about 22,300 at the upper level is the broad range that the option writers are working with. Just keeping an eye out on a couple of data points as well. The put call ratio has moved to 0.85 versus 0.77. Again, telling you that there is some confidence that put writers are getting. This can go all the way up to 1.2 before it begins to look like overbought, but we're far away from that. In fact, we bounced yesterday from oversold levels. A couple of stocks on our radar. I'm looking at some sort of long building in Titagarh Rail Systems. This stock had taken a big knock, down almost 40-45% from its highs. Now we have seen a huge open interest build up on that counter. Bajaj Auto on the other side is seeing some short positions being added. So that's Bajaj Auto, some fresh shots on that counter.
It did reverse from 21,960 in today's session. So that important 50-point range acting as a cushion for the index as of now. But is this the start of a base formation? Well, Saumil Mehta of Mirae Asset Sharekhan is joining us to answer just that. Saumil, good afternoon. Thank you for joining in. What's your call on the index now that we have managed to defend 22,000 for 2 days in a row now? Is this the start of a base formation for the index? And couple that up with your stock recommendations as well.
Good afternoon. Thank you for having me on the show. Very close. We are very close. I think, but before taking a call, I think we should wait for a reversal pattern to happen. Short-term and medium-term trend remains negative. We're forming low tops, low bottom. However, there are stocks which are looking good at this point of time. On Nifty, I think we are still, if the trend is negative, the next levels to watch out is 21,800 and 21,500 on the downside. In the very short term, probably for a week, we probably see a small consolidation towards 22,300 levels. 22,300 would be a very, very a strong resistance on the upside. If we close above that, then the momentum on the upside continues. However, short-term, medium-term trend negative.
All right. And what about individual stocks?
I'm betting on mid caps. Mid caps have very good momentum at the moment, and if we are planning to bounce a little bit, then I would want to go with Trent. Good momentum. Stop loss would be 49.80, and target would be around 51.50. The second stock would be Polycab. Stop loss would be 48.50, and the target would be around 5050.
Interesting names there, Trent and Polycab. Saumil, thank you for joining in and sharing with us your views on the index and on specific stocks as well. We take a short break here on Halftime Report, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away. We're introducing CNBC-TV18's all-new app, where you get instant access to breaking news, in-depth articles and financial world updates right at your fingertips. You can download the app right away from the App Store and the Google Play Store. Take a short break. Be right back. Welcome back. 22,070 is where the Nifty is still 50 points lower, continuing to remain in that 50-point range between 22,000 and 22,050, 22,100 is where the index lies, but a significant recovery from the early morning lows. And moving on to our special segment, Fin Street, where Abhishek is telling us today about how the third quarter panned out for housing finance companies and NBFCs. Listen in.
Well, it has been a good quarter for the non-bank lenders with respect to the loan growth and net profit growth. Now, net interest income surprised positively, which actually helped sustain the net interest margin. OPEX cost was very high for both HFCs and NBFCs. Now, earnings have relatively been driven by the lower provisions that you saw this time around. Improvement in asset quality continued for them. Outlook remains healthy. Some pockets are witnessing asset quality issues. So for housing finance companies, the loan growth in Q3 FY25 was about 14.5% YOY and about 3.2% sequentially. X of LIC Housing Finance and Sammaan Capital, the AUM growth was much healthier at about 27.3% YOY and about 5.5% sequentially. The NII growth was healthy as well. NII growth was around 20.5% on a YOY basis and close to 3% on a sequential basis. So calculation shows that the net interest margin expanded YOY to 4.45%, up about 22 basis point YOY and down by 1 basis point sequentially. Operating expenses were high. They were up more than 32% YOY and about 8.3% quarter on quarter. So operating expenses impacted the operating profits in this quarter. Operating profits were up just 5.7% YOY, but they were down by 2.7% on a sequential basis. Now, provisions were at just rupees 60 crores, down about 92% YOY and 98.5% on a sequential basis. So overall, profits after tax for HFCs were up 21% YOY and about 373% sequentially. Now, asset quality continued to improve for them. So gross NPA value-wise was down about 15% on a sequential basis, while net NPA was down more than 1% on a sequential basis. So gross NPA ratio as a resultant declined to 1.75% versus 2.1% in the previous quarter. Net NPA ratio also declined by 3 basis points on a sequential basis. So for NBFCs, X of HFCs, the AUM growth was healthy at about 16.5% YOY and about 3% sequentially. the net interest income growth for them was healthy as well. NII was up 17.7% YOY and 4% quarter-on-quarter. So calculation shows that the net interest margin actually expanded to 6.6%, up 7 basis points on a year-on-year basis and 6 basis points on a sequential basis. Now, operating expenses were high due to employee expenses, which increased sharply. So employee expenses were up 15.1% on a sequential basis and nearly about 26% on a year-on-year basis. So operating profits that grew by 14.7% year-on-year, but they declined by more than 1% on a sequential basis. Now, provisions were at about 8,700 crores, which was up nearly 72% YOY and a decline of 2% quarter-on-quarter. Overall, profit after tax for NBFCs were up nearly 29% YOY and about 7.35% sequentially. Asset quality improved, but ratio-wise, gross NPA in absolute value was up 0.6% quarter-on-quarter. Net NPA value-wise was up nearly 3.5% quarter-on-quarter. As a ratio, gross NPA ratio has declined to 9.77% versus 10% in the previous quarter, while net NPA ratio is at 4.14% versus 4.12% in the previous quarter. Going ahead, loan growth is expected to moderate as per analyst estimate in many segments of NBFCs except gold loans. There are signs of asset quality stress that is emerging in other segments like pockets of vehicle finance, micro loans against property and affordable housing are witnessing pain in asset quality. Pain in the microfinance sector will continue for the lenders. Net interest margin outlook post the rate cut from RBI will be divergent. So rate cut is beneficial for fixed rate NBFCs like MMFSL, Shriram Finance as well as Cholamandalam, while rate cut is negative for floating rate based NBFCs like HFCs, housing finance companies. Valuations are around the long-term averages for superior earnings growth of 15-20% like MMFSL, Shriram, Bajaj Finance as well as Cholamandalam as per analyst.
All right, we take that point, Abhishek. Thanks a lot for that. Just before we slip into that short break, just pull up a couple of these financials which are now picking up pace. Abhishek was speaking about some of the financials on Fin Street. Look at Shriram Finance. That's moved to the high point of trade. We're seeing some traction in, HDFC Bank as well, which held on in yesterday's trading session. Now currently moved to the high point of trade for that stock as well. And then we are seeing some traction in LIC Housing Finance as well, which has seen a near 3.5% recovery from the lows, currently at the higher end of today's trading range. We take a short break, come back, get you more on the markets. A lot of stock-specific action. Stay with us.
Welcome back. Just before we move on, quickly highlighting a couple of names. Gensol Engineering is one of them, down in a 20% circuit now, and that's after Care Ratings has downgraded the company to a D from a BB+, and it's a big downgrade that has come in for Gensol, and as a result of which the stock is down in a 20% circuit as of now. It's down almost 65% now from its peak of over 1100 rupees. And some of the defense names, though, on the flip side, are doing very well for themselves, be it Cochin Shipyard, Garden Reach, Mazgaon Dock, all of them are doing well, and that is of course on the back of the European defense names doing very well overnight on the Rearm Europe plans that will be unveiled anytime during the course of the day. But moving on then, Ramdev Agrawal of Motilal Oswal Financial Services says that the promoters may start buying their stocks from the market in the next 2 to 3 months. Listen to what he said.
In 2-3 months' time, when promoters will actually come to buy, because they are the guys who are the smartest. They know the value of the company. So when the promoter starts buying, so actually you can't see that selectively in the companies, promoters will start buying. And those are companies to track. It's a much bigger game. So, the irrationality which was there, where because of lack of supply, the irrationality in terms of pushing the stock price of multiples to 70, 80, 100, irrespective, that was wrong. So that will correct. Even that is behind, I'm telling you. It will correct. What has to be corrected will get corrected.
In fact, Nigel is here with a list of those companies where promoter buying was seen in the last few quarters. Nigel.
Well, that's right. The last few months there's been plenty of talk about promoter selling, and that seems to have done a bit of a role reversal now, because there are select promoters that are coming in. They're showing the faith, And as we normally say, promoters, they're the best analysts of their own company. And select companies have seen some kind of promoter chipping in. Case in point being TD Power Systems. Just yesterday, they reported on the exchange that in February, the promoter entity went ahead and they bought close to around 15,000 shares. However, the street likes that, because the promoter coming in there and supporting the stock. And in February, we had a lot of companies actually where you had the promoter entity came in there, backed up the stock and bought some stake. One of the top, buys that we saw in value terms as well as in percentage terms is the promoter of JSPL. Now, the promoter entity, that's Jindal Power, they have come ahead and they have bought close to around 0.96% stake, which amounted to close to around 650 to around 700 crores approximately. And that's why the stake has gone up to above 62% post this particular buy. Not just them, we had the management of Maharashtra Seamless as well joining in. And remember, the promoter over the last few years has gradually been increasing their stake from around 65%. Last reported number was around 68% as of December 2024. And in February, they've gone ahead and bought close to around 0.5%. That's not it. If you look at Quest Corp as well, the promoter entity, just a few quarters ago, that was in December 2022, they went ahead and in fact, they increased their stake in March 2023 quarter by close to around 5%, very, very roughly. And now in the last month or so, last couple of months, they've gone ahead and they've increased their stake yet again to around 57.06%. So there is some creeping acquisition that we have seen from the promoter entities. And that's been the trend actually for the last few quarters as well, because select stocks have fallen off the cliff. But we have seen that promoters have come in there and they have been buying. If you look at Snowman Logistics as well, the promoter entity, which is Gateway Distriparks, they have come on the channel and they've said we're looking at making it a subsidiary. And that's precisely what's happened, because the promoter holding now has gone above 50% from around 40%. Fairchem Organics as well, we don't normally track this counter too often, but between September as well as December quarter, the promoter entity went in there, increased stake by around 2.5%. And finally, Mangalam Cement, the street is waiting for some kind of corporate action. I've been hearing that buzz for the last many quarters. But for the time being, the promoter entity itself has gone in there and increased stake by close to around 1%. So as Mr. Agarwal said, we need to keep an eye out on this. Select promoters, they'll come in there, they'll be like, let's back up my own stock, because a lot of these stocks have corrected a good deal from the top. And I'm encouraging to see some promoters coming there, putting in their own money and increasing their stake. So the quantity is varying across counters. Back to you.
Take that point, Nigel. Thanks a lot for that. For a moment, when you said Mangalam Cement, I was happy that you, suffixed that with cement, because I thought you were suddenly calling out to me. And here's a disclosure: I have nothing to do with that company or that promoter.
No, you're not even on the block.
Not even.
You're done and dusted. Please be clear about that.
Done totally. What we'll do is we'll take a short break on the other side. While Nigel, me, and Hormaz keep talking on the other side, you have Manisha Gupta joining in with the agri expert Sumit Gupta to talk about all things commodities.
Welcome back, and it all starts to take another level, a notch up when you talk about agriculture products, which also seem to be now getting a part of trade wars there. I want to take the quote on as the US President Trump posted on Truth Social. He said to the great farmers of the United States, and get ready to start making a lot of agriculture products to be sold inside of the United States. The tariffs will go on external products on 2nd of April. Have fun, and unquote. I mean, that is what the US president has now spoken about. While we have been talking about, tariffs going on various commodities and countries as well, and some of the metals also. But now we are talking about agriculture commodities here. So what the US president has talked about is new tariffs on imported agricultural products will take effect from 2nd of April. So what we have as of now is, of course, a date, and we've seen those dates being changed and various commodities getting changed as well. But there is a conversation now that has been initiated on agriculture products as of now. The US president has urged American farmers to increase domestic production. He also has emphasized on need for agriculture products to be sold within US itself. What we also are looking at in the meanwhile is China talking about retaliatory tariffs. Now, what China has talked about, and here China is talking about specific commodities also. 15% on US goods, including chicken and cotton, and soybeans will face a 10% tariff, is what China has said. So more important to note here is that even as US is talking about farm products now, but the US agriculture tariffs as of now lacks details on what products this would be put on. The second point is that the proposed tariffs will raise the cost of imported goods within US here. The tariffs of agri imports is in that sense seen beneficial for the US farmers, because then you are protecting the US farmers here. More production will be used in-house itself. The second thing to watch out for is that the tariffs on products like soybean and grain is what really could have a major impact, not just for US and China, but various other geographies as well. Now, when you talk about the Indian markets itself, we do understand, and this all is via sources, that India as of now seems to be resisting pressure to lower tariffs on many of these agriculture products. India seems to be putting that front up because lower tariffs would mean more cheaper imports, more dumping of agriculture products within India, and that could really impact the farmers within Indian markets itself. So there is some conversations that we do understand, because the trade minister right now is in US exactly talking on the same things. Let's take that discussion forward and let's get in Sumit Gupta to do the same. Sumit, hi. First of all, on the Indian markets itself, we do understand that when it comes to soybean, wheat, grains, there are conversations that we understand, and all of this is coming via sources. India is resisting all of these tariffs being taken off. What is your stand? What is the kind of trade that India does with US right now, and what commodities really are we looking at?
Hi, Manisha ji. This is the topic of the hour right now. And Truth and X, they are driving the global trade these days. As you have captured the analysis on how Trump is thinking about trade, tariffs, and especially on the agricultural side, because everybody is actually catering to their vote bank, the people who have voted for them. If you look at the US politics, Republicans dominantly are strong in the agricultural, in the Bible Belt, and that's where majority of the farmers live, and they have to cater to their segment. And as far as when we come to India, India has largely tariff are in line of agreement on agriculture basis year 2000. So India is in no compulsion to reduce this agri tariff because it comes under the category of a developing country. And within that, I personally believe there'll be a lot of high temperature discussion that will take place. But US grows product to export. India grows product to sustain itself. Personally, I don't believe with 100 million farmer, 800 million people living in rural India, 600 million people directly dependent on agriculture, India can bow down on the agricultural tariffs in any way. So this will be a topic of negotiation, discussion. There'll be more concessions that will be given on the other side, but agriculture, personally, I believe will be not impacted.
Sumit, also when we look at the US and China trade itself and the kind of retaliatory tariffs that China is talking about, especially in soybeans and cotton, how will that impact the global trade, and how does that impact India?
That is a very interesting question, because what happens whenever you put a tariff, you actually don't change the supply and demand of the commodity, you just change the trade flow. Right now, for example, soybeans which are going from US to China, now the trade flow will emerge. Those soybeans will start going from Brazil and US. US will start processing more. They have the processing capacity. US will start exporting more meal. Europe will start importing more beans from US Chicago CME prices may go down, South American bases may go up. As more soybeans will go from South America to China, it may impact vegetable oil prices. Vegetable oil prices in India may go up because South American farmer will have more incentive to ship out soybeans to China, because there'll be a 10% tariff on China on the US goods. So for sure, this realignment of trade flows is going to impact India. But we are too early in this journey. It's very difficult to take a call at this moment. It is more of an understanding that we have to develop.
Oh, well, absolutely. Sumit, that was my next question, because as of now, when you look at these agriculture commodity prices, you look at a CME or you look at the Chinese markets, in some sense, you look at Asian markets as well, whether it is about Malaysia, Indonesia, etc. Do you see all of that changing? Because we've seen various other commodities either trade in discount or premium, depending on what geography you're looking at.
For sure. Actually, Chicago represents the price of commodities in Chicago. And world over, we trade premiums, defining, okay, what is a discount and premium of goods against the prices on Chicago. And once there'll be a tariff on US goods export, especially the goods they export, that means US Chicago has to go down to accommodate for those tariffs. And South America and other countries will start trading in a much significant premium over Chicago because they will not have tariffs. But largely, personally, I believe there'll be a much larger realignment of the trade flows. China will move towards South America, US will move towards Korea, Japan, Central America, Asia, Vietnam. So there'll be a big realignment of the trade flows. And as far as agriculture is concerned, the beauty of that product is it is not a factory that you have a fixed capacity. It changes every year. And every country needs to keep their food inflation low. And US is an exporter of last resort.
Sumit, do you think India could be forced to buy from US without tariffs? Do you see that kind of a situation emerging even for a short moment? And do you see India in a strong, negotiating position for that?
Personally, I believe if you look at the budget of this year, Finance Minister started with first statement that we want to increase realization of Indian farmer. So if we believe that budget is a statement that gives an outlook on what government of India thinks, and number one. Number two, looking at the farm economy, looking at a reduction in the consumption power in rural India at the moment, personally, I don't believe that government of India is going to tweak with agriculture at any point in time. So there'll be much more negotiation which will happen, concessions on the other side, but agricultural is something which is like a holy cow for India.
Oh, well, yes. And if the Indian markets are forced or Indian ministers are forced to buy with lower tariff, that doesn't really augur well with the kind of policy that India has and, of course, does not work with millions of farmers that India has as well. Sumit, thank you so much for joining in. Still early days, as you said, and we will wait for the details on what negotiations are brought to the table and what really India gives into that. But with that, it's wrap on Halftime Report. Business Lunch will take all the action forward.